Good morning, everyone. Welcome to another RF Crypto video. On today's markets, we see an almost 3% decrease. After yesterday's overtaking of the $2 trillion market cap, it has gone below it and it's now standing at 1.98 trillion. So basically the whole market is down. Bitcoin is down by 2.5%, Ethereum is down by a massive almost 5%, XRP 7%. So looking down, going all the way down to the top 50, we have two tokens that are doing well, and by well I mean 0.25% and 0.05%. Otherwise, the whole market is down. And this is due to the decrease in the prices of US tech stocks and by extent the Nasdaq composites. So whenever the Nasdaq composite goes down, which is mostly comprised of high tech stocks, cryptocurrencies follow because both of them are high tech and cryptocurrencies are highly correlated with Nasdaq. So a good way to gauge the market is looking at Nasdaq, seeing where it's moving and seeing what the predictions are for Nasdaq, and then converting that into predictions for cryptocurrencies because they usually move in the same direction. And looking at the Bitcoin chart, as I said yesterday, we have a resistance level of 46,000 and we have a support level of around 42,800 to 42,900, or we can just round that up to 43,000. So you can see here when the tech stocks went down and obviously the cryptocurrencies markets followed and Bitcoin also dropped, we see three massive red candles. And then once it hit the support level and went a little bit below it, it got completely bought up. And you see the price of Bitcoin flirting with the support level, always touching it, never going below it, always touching it, never going below it. As soon as it goes down to 43,000, it gets immediately bought up. If you can see, there is this wick here. It went down and immediately got bought up. Same thing happened. It went down and immediately got bought up. So it is still trading within these bands. There has been no real news for it to go below this $43,000 support level and keep going down. And I mean, it is trading in a stable range of $3,000, which in retrospect is less than 10% of the total price of Bitcoin at the moment. So I'm not sure, just because the bad news, which I'll talk about just now, has been factored into these decreases, we might see the price going up. It might test this $46,000 resistance level in the next few days. So it's something to keep an eye on. So the main reason why Bitcoin drops, as well as stocks, is due to the Fed's official hawkish remarks. Responding to a surprisingly high rates of inflation, the Federal Reserve Bank of St. Louis President James Bullard said that he supports raising interest rates by a full percentage points in July. Up to now, we expected the Federal Reserve to increase interest rates by 0.25% or 0.5% at most per quarter. But now the president of one of the reserve banks in the US is supporting increasing interest rates by a full percentage point in July, so in one of the quarters. His comments came after the US Labor Department on Thursday reported that the Consumer Price Index, which is a measure for inflation, in January hit 7.5%, which is higher than what analysts expected earlier. So a combination of a higher than expected inflation and a statement that says that they're going to increase interest rates by a full percentage point led to the Nasdaq to drop and by extent the cryptocurrency market to drop as well. That's why we saw Bitcoin drop in the chart that I previously showed. And why the prices have dropped in response to this is because if the Federal Reserve Bank increases interest rates aggressively, then what happens is that it becomes more expensive for capital to enter the market because it becomes more expensive to get loans. The higher the interest rates, the more interest payments you have to make. During the pandemic, interest rates were basically zero, so there was cheap capital in the markets. And the fact that this party is going to end because interest rates are going to get higher indicates that it is a bearish signal because there is less capital or there is less money in the market to go into cryptocurrencies, and naturally the price of cryptocurrencies will go down because with little money in the markets, people have to sort of think, where is the best place to put our money? And usually when this happens, they usually tend to go for the least risky ones, which in this case is blue chip stocks like Apple and Google or Amazon. They tend to shy away from riskier assets such as cryptocurrencies. Asset manager Van Eck says stablecoins should be treated as investment funds, not banks, which makes perfect sense because they don't lend money. So he doesn't understand why there is a push to regulate them like banks. bank regulation may in fact imply some sort of government guarantee, which stablecoins don't give. So it really doesn't make sense to regulate them like banks. So Van Eck's statement followed just 2 weeks after the US Undersecretary for Domestic Finance, Nandy Liang, testified before Congress that stablecoins are bank-like products as well as an investment-like product, which is why there is a regulatory gap. And Van Eck criticized this report for not seeing the similarities between stablecoins and money market funds. So he made 2 recommendations for a potential stablecoin regulatory framework, which does not include treating it as banks. So he says do not regulate stablecoins as you regulate banks because they're not the same thing. One of his suggestions was that the SEC oversees stablecoins for a 4-year trial period, similar to how it considers investment funds under the Investment Company Act of 1940. So usually the SEC oversees investment funds in order to make sure that they're concise, in order to make sure that they do represent what is on paper and that there is no market manipulation going on. The second suggestion is made by Van Eck. He says that you should not force tax withholdings on stablecoins in the future. It doesn't make sense to withhold any tax on stablecoins because they do not pay dividends. So if stablecoins don't pay dividends, then why should you withhold tax? It makes no sense. And not forcing tax withholdings would give stablecoins an opportunity to prove their value in the US. He says do not force tax withholdings. However, we must regulate it in a way to imagine a day when stablecoins pay interest and plan technologically and regulatorily for that day. So there should be caveats in the law that states that if stablecoins pay interest, if stablecoins pay dividends, then this type of regulation will come into effect. But at the moment, such factors are not in consideration because stablecoins do not pay dividends. Stablecoins pay very, very little APY, and they're usually paired with other cryptocurrencies in order to pay APY in those currencies. The European Union finance chief says that the digital euro bill is coming in early 2023. So their goal is to table a legislation in 2023 and is now experimenting with designs and systems for a digital euro with a prototype expected sometime in late 2023. They want to release a CBDC by 2025, and they want to do this soon because this increased interest in CBDCs has emerged from growing concerns that domestic currencies will eventually be undermined by the growing popularity of cryptocurrencies. So in order to be with the future, in order to have digital currencies, in order to prevent stablecoins from taking over as legal tender or as trading tender, these countries, including the European Union, which is an association on its own, want to release a CBDC in order to have a digital currency that is not sort of decentralized, that doesn't undermine their currency. And it's something that they can control. It's something that they can mint and print and give it to the commercial banks so that they can give it to you and I, who are the common or layman. And last year, the European Central Bank conducted research and published a report on digital currencies. It found that a digital euro may help lower interest rates, speed up transaction processes, and decrease cash use. I mean, there was no necessity to conduct such research and publish a report. I mean, my 5-year-old nephew could tell you that a digital euro may help lower interest rates, speed up transaction processes, and decrease cash use. But I mean, Europe has been bureaucratic since the beginning, and in order for them to build up a regulatory framework, I guess they have to have a report in place. A sustainable Bitcoin miner uses waste energy or waste heat to dry wood. Not only does one Norwegian Bitcoin miner boast 99% renewable energy stats, but it's even using waste heat to dry out timber and soon seaweed. So at the Hønefoss Bitcoin mining operation, the hot air generated by Bitcoin mining rigs is recycled and used to dry out chopped logs. And according to Peterson, who is the CEO of Crypto Vault and the owner of these mining operations, Norway has a lot of trapped energy, pointing out to a much higher expected production compared to consumption, as well as limited capacity to transfer the excess energy. And this transfers to very low energy prices, and also it attracts Bitcoin miners because low energy prices mean cheaper mining and more profits. So not only are these Bitcoin miners in Norway using 99% renewable or green energy, but they're using the heat that is released from Bitcoin mining to dry out wood. Usually wood is dried out in nature, which isn't very conducive in Scandinavian countries due to its cold nature. So they used furnaces, and that consumes a lot of electricity. So using that heat, instead of being released into the atmosphere, they can reuse it in order to dry wood, and soon they can dry seaweed. It's incredible. It's incredible. The Scandinavian countries are incredible in energy management, and this is one more example. Moreover, the secondary benefits of Bitcoin mining branch out more than the environment. Over time, Honeyfus grid customers are actually better off due to the presence of CryptoVault's energy-hungry process. So grid fees, like trees, are hacked down year after year because the local area's total energy consumption increases. The more energy is used, the more prices come down over the long term. And the company estimates that circa 2 million euros is saved due to the existence of crypto vaults in their grid. So Norway is a very, very great country for you to have your Bitcoin mining operations, provided that they're energy efficient or they're green in nature. Bitcoin mining is becoming greener and greener and greener. We're soon going to see Bitcoin mining become 100% renewable. I don't see that taking too long, and we're going to see the use of the heat released from Bitcoin mining rigs for other processes. One of them is drying out wood and seaweed. On other more gloomy news, ransomware crypto payments hit at least $602 million last year. But this isn't all negative because it's less than what was stolen in 2020, which was 692 million. 2021, it went down by almost 17% to 602 million. And I think this is from the fact that a lot of special agents or special financial agents are finding ways to recover stolen cryptocurrencies, and also the fact that a lot of exchanges and a lot of companies that are trading in cryptocurrencies or have any relation to cryptocurrencies are vastly and aggressively increasing their cybersecurity, which makes it more difficult for these ransomware hackers to infect your computer. And also the fact that just a few days ago, US special agents from the Department of Justice were able to recover 90% of what was stolen in the 2016 Bitfinex hack. Just shows you how powerful the training is in order to recover such stolen cryptocurrencies. And I think it is a matter of time until these ransomwares and the stolen crypto represent a tiny amount of all crypto transactions in the market. So we might see this trend going up, obviously because of the increase in cryptocurrency adoption, but we have seen that within a year it's starting to go down, and I think this will start going down going forward. And obviously most ransomware attacks are financially motivated, but others appear to have geopolitical goals focused on deception, espionage, reputational damage, and disruption of the enemy's government operations. And I think ransomware or crypto hacks might go up in the future if there are a lot of tensions between high-tech countries, but I think it'll be left to a minimal because countries know that they're prone to these hacks and their cybersecurity will also improve to prevent this. Also, North Korea has reportedly used crypto to circumvent economic sanctions for years. So they have sanctions, they use crypto to purchase goods and services because they're not trackable. But if global regulations come about in terms of crypto, this could also be stamped out very easily. China's Metaverse plans. Decentralization is not required. So experts say that China's corner of the Metaverse is likely to evolve very differently to other international markets, and that decentralized infrastructure may not be part of the game plan. The Sino Metaverse seems likely to repeat what happened with the web. When the internet went mainstream in the 1990s, many people theorized that it may accelerate democracy in China, which wasn't the case because they created their own sort of firewall, so another Great Wall of China, but for the internet, where only whatever was approved by the Communist Party was accepted into Chinese internet. So it will be much easier for China to oversee the development of a local metaverse rather than allowing users to access the global metaverse and spending significant resources censoring and blocking certain experiences. So they want to create a metaverse that fits the country's narrative in terms of control. They want to make sure that people don't create apps or don't create NFTs or anything in the metaverse that goes against the party or their ruling party, and that everything complies to what their censorship rules allow. And this kind of makes sense because the more control they have, the better it is for them to maintain control. And I think that metaverse is going to be big in China, but it won't be decentralized. Every single thing in the metaverse will be controlled, will be monitored by the government. And it's going to be interesting to see in what direction China's metaverse moves as compared to the rest of the world. And with that, we come to the end of today's video. Thank you very much for watching. If you liked the video, please leave a like, please hit the subscribe button, and share the video with your friends and family. I'll see you for the next one. Invest wisely. and cheers.